We will share the link together with the presentation deck shortly after today's session. And lastly, survey link will be distributed after the webinar. So please share your thoughts and feedback on the webinar. And also post-webinar survey will be distributed to participants. This would help us understand your SCF business, current challenges, and opportunities for future collaboration. Also, let me quickly introduce the speakers in today's webinar. From APINDO, Ibu Shinta Kamudani is Vice Chairwoman. Ibu Lisha Elsa is Entrepreneurship Development and MSME Committee at APINDO. And from IFC, Kamar is Regional Manager of FIG Advisory Asia Pacific, also Global SME Banking and SCF Specialist. Akbar is Regional SCF Lead in Asia Pacific. Cliff is a seasoned SCF technology expert. And lastly, Huishan is digital agri-finance expert. Once again, our experts today are here to take any kind of questions, so please feel free to do so. We want to hear from you in this webinar. With that, let me hand over to Kamar for his opening remark. Over to you.
Thank you, Shingo. So good afternoon, everyone, and a very warm welcome to all of you to the IFC APINDO joint webinar on digital supply chain finance. Here at IFC, I'd like to express our sympathies for the tragic losses caused by COVID-19 outbreak in Indonesia. I hope you, your colleagues and families are healthy and safe. Firstly, I'd like to extend our sincere appreciation to APINDO for collaborating with us to host this webinar on digital supply chain finance, which is increasingly becoming a strategic priority within Indonesia, financial sector, rail sector, as well as globally. Special thanks to Ibu Shinta Kamdani and Park Ronald Wala of APINDO in helping put this event together. So I'll take you through a few aspects from a business case to what are the key emerging trends towards the end on how technology and some enablers are important in the aspect of supply chain finance. And when we talk about the supply chain, I think there are three main players, and I'll see how they fit into the context. One is the SMEs. We estimate that the finance gap for MSME in Indonesia is $165 billion. And they often face challenges to access finance due to operational reporting collateral requirements. While they're part of large corporate value chains and sectoral value chains, they are often unable to leverage this to obtain working capital finance. Now coming to the rail sector, companies can use supply chain finance to increase their economic value by extending days payable, really looking at reducing days outstanding, operational cost reduction through automation, and boosting trade volumes through economies of scale. The compelling benefits of supply chain finance make it clear that it is very attractive market opportunity for banks. Supply chain finance contributes significantly to global trade finance, and the global trade finance estimated finance gap is at $1.9 trillion worldwide. So the growth in supply chain finance sector is steadily rising. Indonesia is no exception. Coming to financial institutions, which are the third cornerstone of this puzzle, is that we see that the financial institutions, for them to develop and unlock MSME finance through supply chain finance, is a key enabler and hence a key strategic priority for IFC. A robust supply chain finance market development is critical to increasing access to finance and competitiveness of SMEs serving the value chains in Indonesia. Supply chain finance market creation will not only help achieve financial inclusion, but also generate jobs for Indonesians. According to IFC assessment, supply chain finance market in Indonesia is estimated to have $80 billion potential, which could further develop through strong financial infrastructure. I'll refer to you to a knowledge guide that we had launched in 2018, targeting for banks that are either considering designing or looking at scaling their supply chain finance propositions. The publication, which is available on the internet, captures global trends, benchmarks, best practices, lessons learned, and it can help mobilize the relevant stakeholders in actioning a creating markets agenda and addressing access to finance challenges for SMEs. COVID has really enhanced the need for having supply chain finance solutions, given that all the players in the value chain are facing disruptions which are unprecedented in nature. Indonesia's, for example, logistics sector is facing an era of unprecedented change. The world saw how COVID-19 lockdowns had impacted transport operations, leading to disruptions in value chains and trade behaviors. Unsurprisingly, COVID has created shifts in consumer behavior. Many physical stores were forced to close down, causing people to flock online to buy their daily necessities. Indonesia's e-commerce boom is only just a beginning, and the habits developed during pandemic will increasingly become entrenched as the new normal for consumers going forward. And I mentioned technology, and we see it as a game changer, which will eliminate the uncertainty in the supply chain. Digital supply chain finance programs can play a vital role in supporting supply chain finance and increasing access to finance for MSMEs, particularly sub-suppliers and retailers. By using technology to match demand and supply through curated market-based platforms, shippers and businesses can easily get connected to readily available warehouses and trucks. The benefits of such technologies are enormous. Platforms and solutions such as mobile apps can help businesses improve data management, monitoring, and communication. This leads to lower and more predictable supply chain finance costs, as businesses no longer need to invest in their own infrastructure across various islands. The use of technology also offers the ability to track their inventories, helping reduce uncertainty in their operations and no longer need to unnecessarily stock up on their goods. There are two key angles when we speak about digital supply chain finance. One is technology-enabled supply chain finance for SMEs is a key growth opportunity for banks, and supply chain finance digitization in the real sector generates increasingly standardized data or transaction flow, and participants in the value chain can easily access these knowledge points. Increased transparency and information at every stage are key enablers for delivering of supply chain finance for SMEs. In our handbook, Technology and Digitization in Supply Chain Finance, published in collaboration with UKAID, IFC shares its expertise and lessons learned, which again is a handbook you can access online. So coming to today's event, I think we will be covering a variety of topics, but starting from supply chain finance, potential challenges from business community in Indonesia by APINDO, providing local context from supply chain finance players, overview of user competencies and market education in the country. Then IFC experts will discuss SCF digitization, trends and supply chain finance applications in Indonesia, showcasing solutions available to banks, NBFIs, and technology companies. Also, IFC's digital supply chain project case study in China will be an interesting and fruitful session demonstrating what are key steps needed to establish a successful digital supply chain finance program and how IFC can support. We would also share how IFC sector and anchor mapping, as well as corporations and sector mapping, can curate supply chain finance programs by understanding physical, information, and financial value chains. We hope today's webinar is useful and relevant for all of you as we look forward to sharing valuable insights. With that, I'd like to thank all of our valued panelists and participants for joining the webinar, and we look forward to working together with you even closer than before. Wish you all the best, and it's a pleasure to be here with you. Thank you.
Thank you very much, Kamar, for your opening notes. We would like to recognize sincere appreciation towards APINDO, our local partner, co-host of this webinar, and thank you very much for your support in helping us organize the webinar today. Let me invite Ibu Shinta Kamudani for welcome notes from APINDO. So please, over to you.
Thank you, Mr. Kamar Salim, PIG Advisory Asia and Pacific Manager of the IFC, all our colleagues from IFC, panel of experts, also our friends and colleagues from APINDO, business leaders, distinguished guests, ladies and gentlemen. Good afternoon. On behalf of the APINDO, the Indonesian Employers Association, allow me to welcome you to the joint webinar of digital supply chain finance, which we are hosting IFC, to learn more about a new financing scheme for businesses, primarily MSMEs, which may be beneficial to support Indonesia business recovery and sustainable growth in the post-pandemic era. Getting finance is life and blood of all businesses, especially in the crisis where businesses need to procure sufficient operating capital to keep the business afloat as the market demand slowly recovers. The majority of micro, small, and medium-sized businesses in Indonesia are suffering substantial barriers to obtaining the capital and other resources they require to grow. Now, we all know with COVID-19 pandemic, even more stress to the supply chain, businesses of all kinds struggle to sustain their production, manage liquidity, and preserve working capital. Ironically, at the same time, getting finance is even worse, more difficult for businesses these days, primarily those which are adversely affected by the pandemic. On the one hand, despite the need for financing the real sector to recover the economy, financial institutions are reluctant to distribute credits to businesses which are adversely affected by this pandemic. It is not because of the lack of liquidity, but because they are reluctant to shoulder a higher risk of non-performing loan. On the other hand, businesses are holding back from getting loans as the slow market demand may not enable business to create enough profitability to cover the cost of lending, especially when Indonesia lending rate is one of the most expensive in the region, despite efforts by the OJK and the central bank to lower down in pandemic. Thus, Indonesia businesses with the most dire need of financing to thrive and grow. The MSME are often to be the ones that have the least opportunity and the least access to get finance. These issues are merely the tip of the iceberg. They are only additional problems that happen in the pandemic, not the heart of the problem in getting finance in Indonesia. If we look beyond the pandemic context, actually, problems of getting finance are not noted in structural problems like the low financial literacy, the largely unbanked society, and the significant amount of informal businesses or business without legal entity. Before COVID-19, vast majority of MSME in Indonesia were starved of low-cost financing from the formal banking system due to the issue I just mentioned. They are forced to rely on informal lenders or predatory money lenders who lend money on extremely high interest rates for financing their day-to-day business operations. The direct consequence of this credit gap of MSME is a vicious cycle of high costs, low profitability, stunted growth, and inability to withstand even a mild economic shock. Moreover, MSME and other forms of enterprises are calling for support from private and public stakeholders for them to enhance the financial inclusion. Fortunately, economic digitization offers us more options and opportunity to get sustainable finance without having to wait to fix out the many structural problems that we usually face in getting finance and loans from the traditional banking system, or waiting for government micro-funding support. My colleague, Ibu Licia Ensha, an IFC expert in digital supply chain financing, will explain to you that what digital supply chain financing is, how it can potentially help Indonesian businesses to thrive and grow despite this difficult time, and how businesses in other countries have utilized this financing option for their commercial growth. Supply chain financing in practical sense can be set as a bypass or a fast track in getting sufficient finance for your operation by capitalizing your role in the supply chain. The beauty of it all is that SCF is not a loan, but a reverse factoring, a financing granted based on the productivity or sales you invoice to your buyers in the supply chain. As a supplier, you can get easy access to SCF by utilizing your buyer's better credit profile. Thus, MSME do not have to go through all those long, rigorous, and exhausting loan granting processes simply to get an operating capital to supply products to your buyer. Not only this mechanism will benefit both the MSME suppliers, the buyer, and the financial institutions by transferring liquidity faster and creating greater resilience, sustainability, and certainty in the supply chain. The supplying MSME are getting double benefit as the SCF are typically charged more affordable financing costs compared to traditional corporate lending, yet create enough financial space for business to grow your business. But access to SCF is even more open and widely available for MSME through various fintech platforms, which bridging the trust deficit between SME and the financing providers. As wonderful as it may sound, APINDO believes that the utilization and implementation of SCF as an option and new opportunity for business financing should also be equipped with adaptation to local context and attention to address local business challenges to utilize and tap this benefit. We need to be mindful of the fact that the MSME in the most dire need of financing are typically not in big cities in Indonesia, but in rural areas where education and infrastructure are scarce and less reliable. Thus, digital SCF cannot stand alone, but should be coupled with development of digital infrastructure and empowerment to improve digital literacy and financial literacy for the MSME to utilize this to their maximum benefit and for the optimum growth of their businesses. This will not be easy given the fact that 99% of Indonesian enterprises are MSME. Thus, I hope this webinar will mark a new era of cooperation between APINDO and IFC to empower Indonesia MSME to grow in the future. To all businesses who participated in this webinar, I want to convey that digital SFE is an option, an opportunity in your business to overcome the crisis we face these days. Yet, we need to utilize it as wisely as possible to maximize the benefit of your business survival and growth. Bear in mind that this crisis creates not only things to be worried about, but also tremendous opportunities to reinvent and reorganize your business to be more innovative, more competitive, and more present in the supply chain. Please do think of utilizing this mechanism not only to create short-term gain, short-term survival, but utilizing them strategically to reform and grow your business sustainably into the future. May this this financing option support all your business to go further and what we call in Indonesia untuk bisa naik kelas in the future. Thank you very much.
Thank you very much, Ibu Shinta Kamdani, for your warm welcome notes. And now we would like to move on to the session, and I will first hand over to Lisha for the first session on supply chain finance potential challenges from the business community. Over to you.
Thank you, Shingo. All right, so okay, Andre sharing screen. Maybe we could go. Okay, good. All right, everybody, thank you so much for for this opportunity. Thank you, Shingo. And then I'll start my session. So actually, Andre, I can share directly. It will be easier if I do that from here. Okay, everyone. So thank you, Bushinta, for the opening. Thank you, Mr. Kamar Salim. So here's a bit of landscape of what we do at APINDO. And this presentation is a bit mixed between Bahasa Indonesia and English. But at APINDO, what we try to do, there's a committee where I sit with Pak Ronald Wala, our chair for the committee. And one of the digitization efforts that we've made is creating a portal for businesses, small and medium businesses, so that we can help the growth, whether those businesses who are already in their development process. There are different programs, different business matching, collaboration initiatives that we do, and also in the capacity building area, we also provide master classes, including supply chain finance. And then we also try to inspire new entrepreneurs to be able to develop their business alongside us. And we work with different partners, different community groups, and different entities in growing their businesses. Anything from renewable energy, garment and textile, even FMCG. And the blue colored ones are the ones that I highlighted because these are the partners which we specifically work with in terms of developing supply chain finance understanding or implementation. In the agriculture sector, we work with APINDO, there's ASICS as well, and some representatives are also here. And also we have a particular program for women MSMEs in their understanding of supply chain finance. Now, if we look at why IFC and APINDO started this conversation, we looked at the past due business-to-business invoices in the country. And as Ibu Sinta has also mentioned, financing is a challenge, but with better financial access and instruments in the market, we can actually make this better between the business partners. So on average, we're looking at 48% of Indonesian B2B customers pay their invoices late. So it's almost half of the businesses practices here are paying late, and this affects actually the cost of the goods itself, because then the financial cost of it will also be embedded in the pricing strategy. But on the good news is that customers pay. That's number one, that they are paid. It's just a matter of paying it late. And supply chain finance is something that we can utilize in solving this issue. And then when you look at the pandemic, previously, normally terms of payments will be ranging between 40 days or 30 plus days. But in reality, practice in Indonesia from a payment practices barometer shows that most businesses are late by about 20 days. So this means for businesses, on average, they will need working capital to cover the 57 days of that cash conversion cycle. But after the pandemic, there is a trend where payment duration now falls into 73 days. So this is almost 3 months. And this is where actually supply chain finance can play a big role in the market, both as businesses and financial institutions as well. And when we look at the competition, we're talking about competition earlier. While in the past, the competition has always been organization to organization. So if you're supplying soybeans from West Java and another one supplying from East Java, so competition is between the organizations. But then at the moment, what we're looking at is a competition between supply chains, local soybeans and imported soybeans. And this applies to also other commodities and other products in the market. And this is just a simple one. But then when we talk about automobile industry, garment and textile industry, FMCG industry, we're looking at the same trend. And again, while in the past, it's always brand to brand, organization to organization, what we found in the trend now, it's the competition among supply chains. So it's how efficient your cash conversion cycles can be. In some markets, only about 30-day ability to manage that, but then some other markets, they're able to provide 180 days payment term. So it's a supply chain to supply chain competition that we're looking at the moment. Whereas actually in becoming competitive, there are advantages through financial strategies that there are specific solutions for working capital. So it's not just the conventional loans that we're looking at. And the moments for financing ranges from, pre-shipment, during transit, and all the way to the post-shipment as well. And this is what we see most businesses in Indonesia can actually benefit from, understanding a little bit more about the instrument and how to implement that alongside their bank or non-bank financial institution partners. And again, this spectrum of understanding, what we see in our committee, especially working with small and medium enterprises, there is a very broad sense, very broad understanding of supply chain finance. In the very narrow sense, what we see in the market is very much buyer-driven payable solution. Whereas actually, as you go into the broader sense, there are long-term financing solutions. There are also contracts that are longer term in its nature. And when we look at the lending market in Indonesia, the popular retail lending would be around reverse factoring, dynamic discounting, invoice financing, and PO financing, but packaged in very different terminologies. Whereas when we look into the instrument, it's actually most of them will fall under these four items. Whereas actually, you can see there are different ways of implementing supply chain finance, and the availability of the SCF solution is something that we're trying to also work with IFC and bank partners and corporate partners invited to this event to look at. There are so many SCF solutions. The market have only seen a few of them, and this is an opportunity for us to understand a little bit more about how it's being used in different markets and how we can develop this over the next few years. At APINDO, we work with different partners, including with capacity building partners. And when we look at the supply chain finance body of knowledge, there seems to be a progression on understanding what is it, and then from understanding what it is, understanding the mechanics, and typically companies would then be able to make a decision whether or not they should use this instrument against any other financial instrument. And when they do use it, it's how to use the instrument at an optimal level. Because what we see now is that different regions will have their own ways on identifying how the number of working days affect the national industry as well. So here in Indonesia, terminologies like DSO, DIO, DPO has not been part of the day-to-day conversations amongst the financial managers and operations managers as well. So while we are still here on the first phase of understanding what is it and understanding the mechanics, APINDO with its partners are working alongside each other to make sure that different competencies will be available on the corporate side to be able to utilize this as well. And we also benchmark our development strategy with the IFC supply chain finance competency framework here, where we look at not just the understanding the instrument, but whether or not there is an ecosystem to support this. Is there enough product and services? What's the coverage model? What are the transaction banking solutions available? And then, of course, on the HR side, are there systems in place? Can companies maximize the use of these instruments as well? So we use this as a benchmark. And from that, we have three different programs. The first one is geared towards smaller businesses, basic understanding and getting them used to digital tools through technical assistance. And then there are master classes, which we hold from time to time for managers and staff from corporates. And also we have regular spaces for awareness, webinars, and peer-to-peer learning from other SMEs on a wide range of topics. So these three are our pillars. For the smaller group of SMEs, we try to deliver it in a very simple language. We use characters to explain it, and the initiative is called Melati Nusantara. And the understanding of supply chains, where we are in the supply chain, and how to manage supply chain finance is delivered through an e-learning platform, which APINDO and our partners build. So it's giving them the understanding through the digital tools, but also then putting that in a wider digital automation case. So this is an example of what we unquote teach to the younger SMEs how to make a decision, before and after different offers, what's the effect of the financing, and then against them having an overdraft on whatever facility they have right now. So very technical understanding for the SMEs. But for managers and I guess mid-level career managers at different companies, we work with a university in East Java to deliver a modular approach to it, understanding supply chain finance, how to manage your cash-to-cash cycle, the different models of supply chain finance, and it's created to be modular so that they can do it within like a 4-hour blocks or an 8-hour blocks, depending on the company. So some of these are run in-house, some of these are also run as public events and workshops. And some of the topics are, how does supply chain create shareholder value, and the better management of it can develop the company's growth. And it is somewhat technical, but a little bit more advanced. So we're looking at it from whether the corporate is a buyer as a focal point, or whether or not they're a supplier as a focal point of the training itself. And then the weekly webinars that we have are more about, managing different things from, how does that affect your business planning, agri or fishery sector. So we have our weekly events here. So by gathering today, what we'd like to achieve, I suppose, is to give context on how supply chain finance can work for your companies. And at the same time, we have also some bank partners attending today's session to see how they can roll out in Indonesia, and some non-bank partners attending as well, technology companies attending today's session. So this should be a good opening, a good start to this initiative, and hopefully all of your businesses can also benefit from supply chain finance. So with that, thank you. I'll give it back to Shingo.
Thank you very much indeed. It was a good opening for the subsequent sessions. There are many relevant information data and also, many local contexts in terms of supply chain finance. So I appreciate all that. The next session will be run by Cliff Entricken, who will discuss global trends in Sept technologies and their potential applications in Indonesia. So Cliff, over to you.
Thanks, Shingo. Sam, are you going to share? Perfect. All right. Thank you all for having me. So today we'll cover 3 parts in my portion of the webinar. First, overall global trends in supply chain finance and the current level of utilization of technology to mend gaps in the global market. Then we'll specifically talk about some of the key innovations in the technology space for supply chain finance and how they specifically relate to the Indonesian market. And lastly, we will outline the SCF market potential in Indonesia and the key findings and what we feel needs to be done to realize this capacity. So going in the first section, we continue to see a major gap in trade finance. ADB saw this as a 1.5 billion US dollar trade finance gap. Now ICC is saying with COVID, this could expand or has expanded to as much as 5 trillion US dollars. Over 3/4 of corporates globally are having issues with getting all their trade finance needs met. This comes from many reasons, as you can see here, but really some of the key ones we see are around KYC and onboarding requirements and the scalability of onboarding these programs, as well as understanding the relevant products, both on the bank and corporate side. So I think what APINDO is doing with having these market learning sessions is crucial to bring out the capacity in the market. So looking at the next slide, so some key call outs from this trade finance gap. It obviously adversely affects SMEs with lack of collateral and fixed assets being the #1 reason for rejection. This often leads to failed attempts to find alternative sources of financing, with a very small number of these participants actually looking in the digital space. So we can continue to see global gaps in trade finance. There is this perception that technology can help. However, we continue to see participants slow to consider these technology solutions, which brings us to our next slide. So how is technology being utilized globally? From a bank perspective, we see banks assessing technology more and more these days, especially to service the SME markets. They see them as crucial enablers to scale this SME onboarding and roll out these new products such as payables finance or distributor finance, which have large amounts of counterparties to onboard. But there are continued barriers to adoption, as many banks feel the best solution is to either build these applications in-house, which can lead to high cost of adoption, long timelines, especially if the internal team at the bank lacks the product expertise to design these systems. Look at the next slide. It's not dissimilar on the corporate side as well. So corporates have their own issues with utilizing technology to mend the trade finance gap. But from this perspective, it's not that there is unwillingness. It's more from a lack of understanding and what is out there in the market. So invoice financing, for example, may be fairly well known by corporates, but more than 60% see this as some manual, archaic financing tool and are really unaware of the advances in technology to turn it into a revolving source of liquidity, which can go above and beyond existing bank facilities collateralized with fixed assets. So while banks and corporates alike have been somewhat slow to adapt some of these technologies, which could mend the trade finance gaps, there are some key innovations in technology with supply chain finance, which could provide a catalyst for adoption globally and specifically within Indonesia. So if we look at the next section, we'll talk about those. So at a high level, we bucket those into 4 quadrants. So each of these general concepts we're going to talk about is what we mentioned is in the IFC handbook on technology in supply chain finance. So that is available online, but also you can reach out to myself, Lisha, Shingo, and one of us can provide a copy. So we break these out into 4 quadrants. The first one being a digital infrastructure. So this is the foundational use of systems in the supply chain or the order to pay cycle themselves, and may not include any financing activities. So this is really how a buyer and seller may use an online platform to coordinate their procurement and sales processes, or how payments happen between a buyer, seller, or the underlying payments infrastructure. Standardization and interfaces is key. So this is one of the major areas of growth where we see individual systems becoming part of a greater connected ecosystem as technologies may exchange data with each other really in a more efficient manner and a more standardized manner. The managed services and platforms. So we're seeing a shift, like I said before, where corporates and primarily banks really wanted to develop everything in-house. We're seeing this shift from that perspective to assess externally developed solutions and solutions which may actually manage this data in the cloud and provide value add services as well. And finally, data analytics. So you have this ecosystem of connectivity that leads to vast amounts of data. So you need an effective reporting engine to reap the benefits from all this information. So first one, we'll do a deep dive on the next slide into the first section, digital infrastructure. So payments is a key component to that. And that's been on the forefront of change as it relates to supply chain finance. So having an efficient, automated, scalable payment structure is necessary to roll out SCF programs, especially if you're dealing with thousands of participants. In Indonesia, mobile wallets are steadily increasing on the domestic front. While these solutions normally start out as heavily consumer focused, the use of these mobile wallets and QR codes, they're quickly spreading to the SME space, especially in Indonesia. And it's a healthy mix. It's not just non-bank providers such as Gojek, but you also have banks who are getting in the mix as well. You have Genius, Sakuku. So this is a great mix because Indonesia is the fourth largest smartphone market in the world, which you probably all know. And this has been a major sector which OJK has encouraged to really develop to help reach the unbanked. From a payments infrastructure, Indonesia is also working on BE Fast, which is part of their payment systems blueprint for 2025. So this will be a fast payments retail payment system where the transactions will happen really on a 24/7 basis. So lots of movement in this field in Indonesia, especially when we look at supply chain finance in the context of the long tail of counterparties or the second, third, or even fourth level of raw material suppliers or distributors such as the warung in a local village. So another piece of this digital infrastructure is E-Invoicing. So E-Invoicing allows really for just faster, more efficient administrative processes which support supply chain finance. So for example, if you've got a buyer who takes 50 days to manually approve a paper or email-based invoice that's a 60-day invoice, then that supplier may then only have 10 days maximum which they can finance. With E-Invoicing, buyer approvals can happen through a three-way match of a PO, an invoice, a goods receipt, which can reduce that approval down to less than 5 days. So it really leaves the whole full tenor of that invoice, which can be financed. So while there's solutions available to companies in Indonesia around this, there are also factors that inhibit SMEs, especially for taking up these solutions. So in Indonesia, there's nearly 60 million registered SMEs. And these are predominantly informal, and the tax regime is all revenue based. So in essence, you're taxed on what you report as revenue. And IFCs actually estimate the current SME tax compliance in Indonesia is 15%. So the more visibility and reporting you have to that revenue may be viewed critically by SMEs. So you may see pushback to some of these solutions that make payments and communication more efficient, because ultimately it allows for better tracking of SME revenue, leading to more taxes to be paid. So there are potential issues that inhibit that. Standardization interfaces is the second category. So really innovative methods around identity management and verification have become a growing partnership between the public and private sector. So electronic identity, even using biometrics like fingerprints or facial recognition. So both of these are gaining ground in Indonesia with the electronic KTP, which is the national identity database, which is even now having facial recognition software that will be linked to it. So that helps with the personal identity, but business verification is still a key issue. So if you look at something like, say, like Accra in Singapore, they have an API you can set up where you can feed an entity's status and their details as well as their financials as a direct link to the Singaporean government. So you have Ahu Online in Indonesia, but it's a very manual process. You go online, you have to search, you have to pay a fee, you have to draw down PDF documents. So that at this point, I don't know of any integration capabilities or APIs, but definitely a key area of focus, I think, for the future to help there. Speaking of APIs, we have the next one. So APIs are all of the connectors and data maps which links separate solutions, technologies, and these databases into a broader ecosystem. They're usually broken down into public APIs, which are government-led, such as the one I just spoke about with the identity management, or you might also have private or partner APIs, which could be connectors to private data sources such as credit reporting, credit insurance, or even transactional verification with physical supply chain providers. So we talked about a three-way matching before. You may have even a four-way matching where you integrate with an inspection service like SGS to help the approval of that invoice. So there's key opportunities for connecting these ecosystems in Indonesia. We mentioned KTP. There's the Indonesia Movables Assets Registry that's getting off the ground, or just private APIs with well-known corporate ERPs working in Indonesia like Oracle, Equip, or Descara. OJK has even developed an API for peer-to-peer lending reporting for fintechs. So I think in general, this public-private collaboration with connectivity will continue to be one of the greatest areas of innovation, as long as you can maintain standardization across data sets so that they can all speak the same language. Blockchain is always a hot topic, as many people will think it will revolutionize the industry, many industries, in fact. So blockchain, for those who don't know, it's a decentralized, distributed, and can even be a public digital ledger made up of these individual records called blocks, which is used to record transactions across many computers and systems. So this allows the participants to independently check and audit transactions at a cheap cost. And that's really part of it. Data integrity is a core component of distributed data management. And it's the foundation of cryptocurrencies such as Bitcoin and Ethereum. And while crypto may be illegal in Indonesia, the government is working on a digital rupiah, which will be known as the central bank digital currency. So once implemented, this will definitely enhance even payment capabilities. It'll allow further financial inclusion and will allow these supply chain finance products to even be taken down to those lower tiers of counterparties. Cloud solutions. So as I said, using external vendors to house and secure data has often been frowned upon with many banks in many countries, not just Indonesia. So in 2012, the government passed legislation that this data had to be held within Indonesia, but I guess as these ecosystems and APIs started opening up, that the government has as well. So the 2019 regulation now has relaxed these rules, and banks, corporates can work with overseas providers, not just from a cloud standpoint, but third-party software as a service where additional processes and capabilities may be added as well. Last key area we'll discuss is artificial intelligence. So with all of these interconnected systems also comes vast amounts of data. So AI or machine learning aims to process these data sets to drive decision-making around all aspects in supply chain finance, such as credit, fraudulent behavior, and onboarding prioritization. These models or algorithms, they can constantly evolve or learn as new data is introduced. So for a quick example, imagine with your data, the algorithm that outlines there's a high probability of fraudulent behavior if a participant in the supply chain uploads 2 invoices in a row, which are 50% greater than the median of all historical invoice amounts. Well, that algorithm will change in the short term as new invoices are added and that historical median changes. But also, I guess from a broader standpoint, it will add more specificity over time. So let's say 2 years down the road with all of this new data, it could become much more specific and say, there is a risk of fraud for a participant in the FMCG sector, if they upload a first invoice, which is 40% greater than the median, and then a second, which is 28% greater. So ultimately, it continues to learn from all of these data sets. So Ajeka has outlined AI as a key example of financial innovation that needs to be nurtured. So I think we'll see a lot of things here in the Indonesian market. And TechWire has recently said that the AI industry in Indonesia could reach $400 billion US by 2030. So finally, we know there's a trade finance gap. We know there's these capabilities and technology and ongoings and developments in the market in Indonesia to help mend these gaps. What's ultimately the market potential for banks and non-bank lenders? So IFC has conducted a study of key industries which are conducive to supply chain finance, and has determined there is over $80 billion US in SCF assets to be funded in the market. A third of these are buyer driven, so payables, reverse factoring, and the remaining are loan based, so receivables finance, distributor finance. So there's lots of potential here, potentially the greatest in all of Southeast Asia. But ultimately, how do banks and non-bank lenders service that market potential? It's the last slide, Usama. So we see three key areas that need additional focus to make that a success. So business model needs to align. Overall, banks are not providing adequate value proposition to anchors to get them fully engaged in program design and implementation. So for payables, this should be clear value for the anchor in terms of working capital. For distributor finance, it equates to increased sales. So these value metrics should be measurable and detailed in an implementation plan, which the anchor can act as a partner. Overall product issues remain as banks really still heavily focused on fixed assets as collateral. So there needs to be a clear understanding of the credit underwriting process and risk factors associated with supply chain finance programs. And finally, technology. Technology is a major hindrance as we see most of these programs become stagnant due to inefficient counterparty onboarding. There's also limited scalability in terms of the smaller counterparties, that long tail, even the second tiers. So these innovations we talked about earlier in payments and e-invoicing are key for scalability for the long tails of these counterparties. So thank you all. Again, please reach out to any of us if you'd like to know more about technologies in the SCF space or options available to Indonesian corporates or banks. Thank you.
Yeah, thank you, Cliff, for covering a range of different SCF technologies and speak about Indonesia specific, hot topics and trends, etc. in Indonesia, and how may these solutions be applied to some of the challenges to the successful implementation of SCF products. Much appreciated. Before moving on to the next session, let me remind you, if you have any questions or comments even, please feel free to put your questions in the chat box anytime. We encourage you to put comments, questions, whatever you feel in the chat box during the presentation as well. Now, the next session will discuss IFC's use case and learnings in China on digital supply chain finance. And Huishan, our digital agri-finance expert, will share her experience in China. Over to you, Huishan.
Thank you very much, Shingo. Let me share my screen. Can you see my screen now?
Yes.
So good afternoon, everybody. I'm very happy to join this session today. In my presentation today, I will firstly introduce the typical supply chain finance business model of the agriculture sector in China. And then I will share with you what are the two approaches of doing digital agri-finance, supply chain finance. There are mainly two of them. One is digital only, the other one is online plus offline model. And after that, I will have a demonstration of IFC's digital solution and share some use cases. And lastly, I will summarize some of the key success factors of digital supply chain finance based on China's experience. So this is a typical supply chain finance business model of agricultural sector in China. You can see that there are four main actors here. You can see the anchor company. You also have the dealers, distributors, and farmers or agri MSMEs and financial institutions. So in this supply chain finance model, usually dealers or farmers can be the borrowers from the financial institution. And on the left-hand side of this slide, you can see that there are some key features. The first one is a strategic partnership between financial institutions and agri anchor companies. Anchor companies play very important roles in this model. For many financial institutions, sometimes it's not easy to reach farmers in the rural areas or borrowers in the rural areas. So anchor company can use their network to help financial institutions to screen and recommend borrowers. In the meantime, that as we all know that anchor company usually is in the center of the supply chain, and they accumulate a lot of data, for example, the transaction data and historical data. This data can help financial institutions to make better credit decisions and will also enable digital solutions to work. Meanwhile, we know that for many farmers, the reason why that they cannot get access to finance is because they don't have much bank acceptable collaterals. So for anchor companies, they can provide soft collaterals, for example, like guaranteeing for the loans or co-signing for the loans for farmers in their value chain. But sometimes, also in this model, we can see that anchor company can provide enough data. Sometimes financial institutions don't also need collateral at all. So, and apart from that, we can also leverage the network of anchor company on the ground, the sales force on the ground, the rural areas to do marketing of the loan products. And after the loan is disbursed, the sales force of the anchor company can also facilitate financial institutions to do loan monitoring and loan collection. So with this, you probably have a question. That's why anchor company would like to provide this kind of support, right? What is in for them? So then it comes to the next feature of this model, that is to have a clear incentive structure for all players in the supply chain to work. And in China, we usually see anchor companies to have three main incentives to participate in this supply chain finance model. The first incentive is that, for supply chain finance can help them increase their business volume and business sales. Take an example of a fertilizer company. If the loans can help the farmers to increase their agricultural production, the consumption of fertilizer will also increase. As a result, it will benefit the anchor company who produce fertilizer. And the second benefit from the anchor company is that it can largely improve their liquidity. For fertilizer companies in China, the competition is very intense. So, sometimes they need to sell on credit. I don't know whether this is the same case in Indonesia or not. And if they sell on credit, they cannot get the payment immediately. So they need to wait 3 months or even 6 months after the harvest time to get the payment back, which increase the pressure on liquidity. And to address this liquidity issue, sometimes the anchor company need to use their own book to borrow from banks. But with supply chain finance, they can actually they don't need to borrow anymore. And actually they can get a payment within the same day of the sales. This can largely help them to release the liquidity pressure. And the third benefit from anchor companies to join this model is to increase their client stickiness. So by providing, for example, not just fertilizer or input, but also help the farmers to get access to finance. And the last feature on this model is that for a lot of banks in China, they would select to use in-kind loans to do this model instead of cash, which means that the farmer in the end, they don't get cash, but in the end get in-kind credit, for example, like inputs or agricultural machinery like tractors. The reason why Chinese banks select this model because for them, the branch on the ground is limited, especially for those areas in the remote places. And for a lot of even for some fintech companies or for non-bank advice doing supply chain finance, they don't even have any personal personnel on the ground, so it will be difficult for them to monitor how the loan is used. So with in-kind credit, they can make sure that the farmers using the loans, for example, fertilizer, to actually put it into agricultural production, have the income to repay the loan. So let's have a look at this flow. Let's first look at from the agri-anchor company side. Like the flow is like the first, they will share a wireless of dealer to banks, financial institutions. The wireless dealer usually is a list of dealers that have quite a long history of cooperation with the anchor company and have good credit history as well. And these dealers will then recommend to banks the borrowers that are qualified. And the third one is after the farmers, the borrowers usually are farmers or agri-MSMEs. And after the farmers and agri-SMEs are recommended, they themselves will then apply for the loans and also authorize the banks to access data, for example, the credit reports. And after the bank received this loan application, they will also get a lot of data from the anchor company, for example, the invoice from the borrowers or the order, transaction data. For example, farmer want to borrow $2,000 for how much amount of fertilizer. So this type of data will be provided by anchor company to help financial institutions to make loan decision. So after the loan decision is made, then the financial institution will choose to disperse the loan maybe to the anchor company or to the dealer. And then the dealer or the anchor company will provide the loan in terms of like in-kind input, like agri machinery or fertilizer to the farmer. And then the farmer will use the fertilizer to plantation or raise poultry, for example, and then with the income to repay the loan when it's due. So this is a very typical supply chain finance model in China. And for digital supply chain finance, we're seeing that there are two main models. The first one is online plus offline, which means that the whole process is not totally digitalized. You will need to have some process that have to go offline. And for this model, we can see the first step is borrowers in rural areas like farmers, agri-MSMEs. They can use a mobile app from the bank or a QR code to apply for loan. And after the loan information application has been filled, the information will then send to the bank. And then the bank will receive this loan application and identify the location of the borrower. And then this is the offline part to send the loan officers to use an agri loan appraisal app, which later I will demonstrate, to conduct loan investigation in the field. And after collecting this data with the app, the loan officer app, the data will then send to the cloud or the bank service for real-time loan analysis. And the loan analysis will basically, for most of the time, they will use scoring model. And the scoring model will then calculate the scores, risk level or the borrower and the maximum loan amount in seconds. And then with this loan amount come up, the loan amount and whether the loan has been approved or not will send to the SMS message to the mobile phone of the borrower or send to the mobile app as well to notify the borrower about the credit limit. And if e-signature is allowed by the local policy, the borrower can sign each loan contract on the mobile phone. If the e-signature is not allowed, then this is another part that the bank need to go offline to sign the contract with the borrower. The borrower might need to come to the branch to sign the loan contract. And then the bank, after the contract is signed, the bank would make the disbursement to the borrower's designated bank account, or the borrower then make payment to the bank on schedule. This is the online and plus offline part model. And then we will see this is another digital supply chain finance model, which is digital only, which means that you don't have the offline part. All of the whole process happens online. And this is one of the case in China, we have a client called Simple Credit. It's a micro lending company in China, but it's a digital only micro lending company in China. So the first step is they use QR code for client acquisition or onboarding. So you can see the QR code in many like mom and pop shops in the rural areas, and the borrower can just scan the QR code and then start to apply for loan. And after the loan is applied, you can the borrower usually need to download the mobile app from Simple Credit, and then to register themselves as a new client. And in the registration, they need to upload their ID photos and use OCR technology that will automatically identify the ID number, the ID time, and the birthday, etc. And also to do bank account verification. And after that, then we'll come to a facial recognition part. This is the KYC part to make sure that this is a real person that is applying for the loan, and not someone just taking another person's form to apply for the loan. And after facial recognition, then on the mobile app, the borrower need to authorize Simple Credit or the bank to access to their credit reports, historical sales data, and invoice from the agri-anchor company for loan evaluation. In the meantime, they need to also the borrower need to take photo of their business information, for example, their business shops, and also some of their sales records and business license, and also upload to the app. With all of this information from the borrower, from the farmer, and also from the credit bureau and the anchor company, then the platform behind will start to run with the modeling about the credit analysis and the credit risk. And then automatically we'll have approve a line of credit to the farmers in the second. And then we'll go to the online contract signing. So for the whole process, usually it would take around 10 to 15 minutes. So the farmers, they can, from applying the loan to disbursing the loan, would take around 10 to 15 minutes. So it's a huge improved efficiency. So this is what you're seeing here is a digital app that IFC designed with our partners to help loan officers to collect data. So with this app, actually, after all this data, for example, asset, liability, crop information collected, it will do real-time analysis in seconds. And previously, without this app, we found that it usually takes 2 hours for the banks to do loan appraisal. Now it takes 15 minutes. And there's a lot of data verification in the behind. So you adjust some of the questions the bank may raise. How can I make sure the loan collected, the data collected by the loan officers are real and authentic, right? And what you're seeing here is a dashboard that I actually designed it. Behind is a scoring model. So we'll analyze different aspects of the farmers by using the data collected by the loan appraisal app, to analyze their risk level, their asset liability, and their financial ratios, and their disposable incomes, etc. This will help the credit analyst to make loan decision. And for currently in China, the use cases we have very big banks that are using IFC's digital solutions for supply chain finance. For example, like Postal Savings Bank is the 5th largest national bank in China with total asset of $1.86 trillion US. And we also have mid-sized bank like Bank of Langfang is a city commercial bank. And we also have fintech giants, for example, like Alibaba Cloud, which is part of the Alibaba Group, that we're also using the online and offline model. And we have WeCash, is also another fintech company. And we also have 2 very special digital only clients. The first one is WeBank, which is the first digital only bank in China, and it belongs to Tencent, which owns the WeChat, the communication app. And because they are digital only, so they have to choose this digital only model. And also for Simple Credit, is also a simple digital only microfinance company. So you can see that for this digital solution, you can apply in very large banks, traditional banks, and also fintech companies and digital only financial institutions, etc. So because of the time, so this is all for my time constraint. This is all from my presentation. Thank you. I hand over to you, Jingo.
Yeah, thank you, Hushan, for sharing us the China case study and some of the key learnings and range of digital SCF model used in China, and also running a quick demo on IFC analytic tools. Should you need further discussions, please feel free to reach us out anytime. We're happy to follow up. I believe it's relevant and useful information for the audience today. The last session is by Akbar Khan, our regional supply chain finance lead to talk about IFC's advisory value proposition and learnings. And he will also cover use case on Anchor industry mapping exercise, which can help corporation industries gain a clearer picture on how to maximize financial benefits through SCF programs, and how the mapping help understanding the linkages between the major stakeholders in the value chains in terms of physical information flows, and financial flows. Hope this is useful and beneficial. Over to you, Akbar.
Thank you. Thank you, Shingu. And again, I want to thank APINDO to providing us this platform, and very happy to see that we have in this session the real sector, the industry, and the financial institutions together. I'll talk about it, why it is important to bring them together and bridge the gap. And APINDO a great job done in bridging this gap. As far as IFCs, I'll take the opportunity to quickly introduce. So IFC works on 3 fronts. So we support financial institutions and corporates through financial instruments. The most relevant for today's discussion could be risk-sharing facilities for support to MSME finance. So I heard Madam Vice Chairwoman mention the low risk appetite of financial institutions. And this is what we are seeing in many countries. All countries are facing this kind of a challenge, the financial sector, in terms of the risk perception towards the MSME segment. IFC also supports financial institutions through capacity building, and that's something we do by helping them through establishing or strengthening the whole business model aspect, and that's something you are seeing on the right side of the slide. And the third area we work in a country is on the sector level, the ecosystem, and we, along with our World Bank colleagues, we work with the regulators, other bodies, associations to develop or remove any obstacles towards a market need. So in terms of IFC's credentials in supply chain finance, we have a global footprint, and we have, in the last at least 5 years, we have helped over 35 financial institutions, banks globally to do supply chain finance or strengthen their supply chain finance businesses. In Asia, we are currently working in 8 countries, and certainly we are very much interested to do more in Indonesia, and which is a priority country for us. We have access to over 30 supply chain finance specialists, which work with us as needed. So let me start off with the crux of my conversation today. So this slide is the most important slide, as I would say, and my conversation would flow through this. Supply chain finance is a culmination of the financial instrument, which we have been talking about, the products and the financing needs, and the supply chain process. And the supply chain process is what the real sector sees, manages, faces every day. A corporate anchor manages its supply chain from end to end, from the raw material procurement, maybe, and suppliers, and on towards distributors, retailers, and so on. So we have to realize that the role of the industry is so important, especially in the current scenario with the pandemic building up. The real sector, the anchors, the companies need to be proactive and try to promote the smaller players in their supply chain. So that the next slide shows the 2 business models. So primarily we categorize supply chain finance into 2 business models, anchor-led models and standalone models, and the anchor-led model, you see that some of the most popular products, reverse factoring, purchase order financing, distributor finance, payable finance, these are anchor-led models, and the companies, the corporate sector, the real sector, large companies need to take the lead and partner in this with the banks if a supply chain finance program has to be successful. And that's why we are here today, and we are bringing both the corporates and the financial institutions together through this session. Next, please. There are in the supply chain finance process, so this maybe seem very basic to most of the audience here, especially the corporate sector. But this is important to reiterate here, that how important this is to have a common understanding of this among both the real sector and the bankers. So I heard Licia mention the challenges around supply chain finance terminologies. So sometimes the bankers and the industry does not speak the same language. So that's something which I'm highlighting here, that there's a physical flow of goods, and that's something starting from the procurement of the raw material, going to the manufacturer, and going through the work in process and to the retailer. So that's the physical flow, and seeing the details of it. Where are the bottlenecks? Where are the delays? Where are the opportunities to digitize this process or use technology? The second flow, as you see, is the financial flow. And those are those green lines appearing now going as showing cash on delivery through the retailer to the distributor, and the distributor may get some credit terms, certainly, and then to the manufacturer. So understanding the terms, the tenures, where are the delays happening, and in the industry, in the company itself, and comparing it with your peer companies, that's extremely important, and that these then trigger the need for a certain supply chain finance product. The third area to map and to understand and to deep dive is the informational flows. And again, these are the paper flows happening from the start, the purchase order, the ship departure documents, the bill of ladings, the credit rate, and invoices invoices. So all of this needs to be mapped in terms of understood. How does it happen? What are the inefficiencies, and where is the digitization opportunity? So when we talk about digitization, it seems easy to do, but we need to have this in-depth understanding of the supply chain process to understand where exactly and what kind of digitization can happen. This is why I was highlighting that this aspect of the mapping thing. So IFC, we work around this. We help our financial institutions, as I said, banks, and gather this understanding, these insights. And this is an example, just one of the slides from a 50 slide document which we did for the auto industry in Pakistan. So this starts from the importers to the vendors, suppliers, the vendors themselves, and then the dealers, customers, and the end consumers. So we help map out a size and industry and see how much is the opportunity, and where are the opportunities within the whole supply chain. Next, please. So what we get out of it, this is an example. So for example, an anchor company again, in Pakistan, they were facing a problem in getting a supply chain program through with banks. So what we started off 3 years, 4 years back was that this was a largest tractor manufacturer in Pakistan, a large agro-based country. They wanted to pitch a supply chain program to banks. And this is the kind of output we developed with the company to help the bankers understand that the rating of their vendors, their parts dealers, the tractor dealers, and the tractor workshops in their whole network. The tractor company, which we are calling the anchor company, rates these players, the vendors, in A category, B category, C category. I'm sure most of your corporate clients attending today, the supply chain managers, do these ratings. And this kind of information is extremely important for a banker to look at, to segment, and then it mitigates their risk. If this kind of data is supplied by an anchor company to a banker, they can start off with the less risky by financing a program for the less risky and then going to the more risky players in the supply chain finance. So what I am leaving at the table today, friends, is that especially in the current circumstances, the pandemic and all, and the low risk appetite of the banks, the corporate sector, the real sector also should share the responsibility. They need to open up make some data available to the bankers. They have a treasure of data available in the industry on their SMEs. So if they share that kind of data, I think that helps a lot a banker to take risk on the supply chain. What do we have next? So here again, so this is the culmination now. Mapping of the physical, informational, financial supply chain, and then the trigger of the financial products at different points in the whole supply chain. So this then provides a holistic view of what kind of products at what stage are required in the whole process. So this is something, again, I emphasize that this kind of a view or insight is important for a banker to have, and this we help. We look forward to working through APINDO with certain anchors and do this kind of mapping so that it helps understand and opens up the network to the bankers, and we have seen that then it helps in risk mitigation and success of programs. And I'll end again with the current situation, and certainly this anchor mapping, understanding of where the bottlenecks are and where are the stresses in the whole supply chain is so important for the post-COVID recovery, that this certainly will not be just an academic exercise to do. It will certainly help many corporates and banks to understand the risks they face through their supply chains. Thank you.
Thank you, Akbar. And thank you for the presentation.
We can't hear you.
Sorry. Hello. Thank you for the presenters, and thank you very much again for attending this webinar so far. I hope all the presentations were meaningful and relevant, and we would like to hear from you for the remaining time. And we are about 10 minutes late, but we would like to hear questions, thoughts, feedback from the audience. And I still encourage you to place your questions on the chat box if you have any. And floor is all yours, but we are seeing some questions in the Q&A. So should we start off with these, or anyone from the floor have questions comments? Okay, perhaps we can take up some questions from the Q&A. So the first one is, as P2P lending providing financial solution to the SCF of the anchor, how financial institutions enter the ecosystem play when the company, anchor company itself is reluctant to share their data? And what other strategies can be used to attract the anchor? So maybe this question is for Cliff.
I can just mention, I can start off because that's what I mentioned, that the responsibility has to be shared here between the financial institution and the real sector. We see all over the place this reluctance to hold on to that precious data by Unilevers and P&Gs and large auto manufacturers, but they also, if the banks are able to give them a good value proposition, they are able to talk and convince the CFO of a large company and help in supporting his or her, the CFO's KPIs, which is improving the cash conversion cycle. That's the biggest KPI for a CFO. If they can convince and give a good value proposition, the corporates will be able to share that data. And that's something which is required. And a supply chain finance program can only be successful if this is a joint venture. Cliff, do you want to add here?
Yeah, that's exactly right. It's a partnership, and you've got to show value to the anchor. Like we were saying, it's working capital that you're showing on the payables finance side. It's increased sales that you're mapping out for them on the distributor side. And I mean that context literally. You're mapping it out for them. You're looking at their individual suppliers. You're looking at their payment terms, their spend. You're designing a program that says, okay, the first 2 months, we're going to work on your top tier suppliers, these 6 or 7. We're going to have in-person discussions. We're going to negotiate extended payment terms of 15 days for these 2, 30 days for the rest of them. And it's going to equate to X amount of rupiah in working capital gain for you as the anchor buyer. And to get this, you need to provide introductions. We need to have your procurement team there to help negotiate. And then we will ongoing track the targets and the value that you make from the onboarding of these counterparty participants. So 100%, it is a partnership, but you've got to maintain that there's a very definitive value that you're pitching to that anchor. Otherwise, you're going to get what we always see where these programs fall apart. An anchor will provide you with a list of suppliers, potentially not even contact information, and say, go onboard them. And that's where you'll have a list of 200 counterparties, and 6 months down the road, you may have 5 onboarded. And that's not just a fintech problem. That's not just a domestic bank problem. We've had those discussions with Standard Chartered Bank in Singapore. I mean, these are just problems that every banker and funder goes through. So it's key.
Yeah, can I also add a little bit from my observation? I think the data is really the key. And like in my presentation, I mentioned that, for anchor companies to cooperate to provide banks with data, it's very important to have the right incentives for them. We need to answer the question, why would they provide you with the data? What is in for them? So if we can answer this question well, I think this addresses half the problem. And the second thing is how to get this data. In China, we actually take a phased approach. In the beginning, the banks will talk to the anchor company, say, okay, I only need some of the data that is actually publicly available from you. That, for the invoice data, actually the banks get this data from the anchor company. The anchor company anyway will need to provide this invoice data to the dealer or to the farmer. For example, how much tons of fertilizer is being purchased, what amount of money, right? So, and also some of the not that sensitive data, for example, for these farmers or these dealers that is going to borrow money from the bank, how long have they been cooperated with you? For how many years, right? And what is the sales volume, etc. And after that, actually for this kind of data already is very helpful for bank to make some of the loan decision. For example, how much is the loan amount going to be, right? And with this, with the build of the time for build of trust, gradually maybe the anchor company, if they have very good ERP system, they can open up their ERP system to connect the system with the bank by using API. But that will take some time and approach. So we suggest that for banks don't need to rush at the first time that will scare away the anchor company to say we need a lot of data from you. Actually, you only need a portion of the data for your loan decision making. Yeah.
Thanks. Let me move on to the next questions, if I may. So the next question is for IFC. And in the last 2 years, which industry sectors and how fast it is being processed by IFC supporting supply chain in Indonesia, and how IFC has supported supply chain in Asia region as well? Give us a specific example, and which banks in Indonesia that you think could be a good partner for IFC moving forward. So perhaps I can take up for the Indonesian context, and maybe Akbar and others can mention about regional projects later on. So just to give you some context, as you may know, major banks in Indonesia have already developed some kind of supply chain finance, and this is mainly around the downstream distribution finance. But all banks struggle with scaling up their supply chain finance business portfolio due to lack of comprehensive programmatic approach and also automation. In terms of business model, we found that banks continue applying traditional approach to their SFF programs, which results in lack of interest from anchor companies, and the bank themselves are unable to articulate financial benefits to their anchor corporates and other stakeholders. And product design, also there's operational inefficiencies seem to be a common theme across banking in Indonesia. That due to lack of a fully integrated technology solution, which ensures seamless and real-time integration between corporates, SMEs, and banks. And also scalability, technology will play a key role definitely. And many of the banks are looking at partnering with a technology platform to set up new business as well. And we are talking to large domestic bank in Indonesia. Perhaps last year we were talking to 2 of them, and both of them are keen to go deeper into the chain to capture smaller suppliers, retailers, in the second tier, third tier. And they're looking to explore their supply chain finance product lineups going into retailer finance space as well. And also in terms of non-bank financial institutions, we are increasingly talking to multi-finance companies. Traditionally, they run two-wheeler, four-wheeler finance business in the past, but due to COVID, their core business is hit significantly, and they themselves are looking to diversify their revenue pillars, and they're looking at products like factoring and asset-based lending products. So we are talking to non-bank financial institutions as well, and see if we can help them set up the business and also scale up their existing business as well. So maybe Akbar, others can mention about regional activities.
I can just reiterate here. So the purpose here, we are still reaching out to the industry, to the financial sector, colleagues through such discussions on understanding the interests, the challenges in Indonesia. In Asia, as I mentioned, that we are currently working with 13 banks in 8 countries, and we can have separate discussions, whoever is interested to share those experiences with you. In Indonesia, through this session, some of the financial institutions are also attending. We would like to reach out and follow up one-to-one discussions on their interests, their challenges, and opportunities, even if it is on the risk mitigation side or on setting up the right business model, the right products, the right segmentation, the selection of the anchors, the selection which industries to go into. All of that we help banks with in engagements.
Thanks, Akbar. Thanks, Pak Singo, for the reply. Actually, I'm the one who asked that questions because I want to know actually the concrete ideas on how IFC able to support Indonesian sectors, business sectors, and which sectors do you want to prioritize first? Because again, my name is Anna. Yeah, I'm also in APINDO as well as Kadin, and as well as you know that I'm also in the Association Textile and Garment of Indonesia. What I would like to see IFC in a bigger role for Indonesia is more to really not just advising Indonesia what to do, but actually supporting the real sectors that really real and is actually the backbone of the economy of Indonesia. Theory is easy. I do apologize, gentlemen, ladies here, that I found that these days theory is easy to talk about, but reality is so much different, right? But the world needs genuity. Indonesia needs genuity from all the players, and how to actually crystallize the theory into the real sectors, because that's where you know, employment happens. That's where the economy can actually be driven, right? So that's the reason why I'm asking that question, because I want to see how we can benchmark against the world on how this supply chain can indeed being realized in Indonesia. And I do hear a lot of people saying that a lot of financial institution is hesitant because of maybe data, maybe they don't understand how to cope up with the risk. Maybe there's also a need for IFC or for even World Bank to actually speak this to OJK or regulators in Indonesia to ensure that supply chain is indeed happening throughout the world and benchmark Indonesia against the world as well. So I keen to look at this, because this is how we can accelerate the economy of Indonesia, by having this supply chain crystallize into a real sectors. And bear in mind, this is not only about micro businesses or small businesses, but it actually can go up to the level of the high level of corporates, small, medium, and big corporations, if it may, because the openness of the data, the tangible things that can happen is there. Do apologize, yeah, because supply chain is something that I'm very, very much interested in, and I want this to be crystallized not just for my business, but also for the real sectors which coincide with how Indonesia are going to prioritize and be the backbone of the country as well. You know, we have a lot of homeworks, right, with regards to after COVID, post-COVID, and what's not. Yeah.
Thank you, Anne. Very happy to hear this from you and your commitment and interest. So that's critical, where there is so much of a challenge. This is a huge market gap, a huge country, huge opportunity. We have to start somewhere. So we cannot claim IFC or APINDO that will solve all the problems. So just to give you an idea, we'll have follow-up discussions. I'll contact you. But for example, our single engagement with a bank is just ending after 3 years. And about 10 or 12 of our specialists have been working in these 3-4 years. So we have established, worked, sold their products, developed their products. So that's the kind of engagements we have with financial institutions, and we also help them understand the industry ranking prioritization. We have done that for Indonesia. We have that information in our market sizing. We have done where are the largest industry opportunities. We have a methodology for ranking order of industries, whether to go into a chemical industry as an anchor. Is that more feasible for supply chain finance, or is it more feasible right now to go into the auto industry? We have those rankings and we can start from one. FMCG is a clear starter. And auto industry is a clear starter unless there's a big challenge these days because of COVID. But we can start somewhere. That concept, that structure can be applied and replicated to other industries. And I think you know more than us about which industries are better, where to go on, and it will be a great partnership if you could help us identify those opportunities, where to start, even if it is a small engagement in one industry, and do that deep dive, help the bank, one or two banks, understand that industry better.
Thank you, Pak Akbar. Thank you, Pak Singo, that answer. Ibu Lisha and as well as Cliff, it's not that I don't want to ask you questions, I do, but we have a lot of sessions already. And
No worries.
think it's better other people asking you than me. Thank you so much, gentlemen. And
that's why we were quiet.
Thank you, Bu Anna.
Thanks, Anne.
And I mean, it's open to everyone in the room as well for technical questions. This could be some new concepts that you'd like to ask. I see Pak Jeffrey would raise.
Hi everyone. Hi Pak Singo, Pak Akbar, and Bu Anna. Apa kabar Bu Anna? Actually, yeah, I'm from QNB Indonesia. I think the supply chain subject is a very hot topic now. Supply chain has been there for quite some time in Indonesia, right? But recently, as you know, our regulator, which is Central Bank, which Bank Indonesia as well as OJK, is at the direction of our president to embarking to support SME, which is that portfolio of SME has to be increased to up to 30%, I think, by 2024, right? And one of the solutions is provided by, our regulator is actually we can use supply chain as way to expedite the process of onboarding of SME, because otherwise banks like us or foreign banks, in general will be having a hard time to reach out to SME across Indonesia given the number of our branches. Yeah. Now, I think in my view, I think IFC in this case, I think you should work also together with OJK and BI, right? With regards to how you can help them in terms of help the banks also expediting this process, because this is something which it's going to be very aggressive with regards to the target of 30%. And the only way the way I look at this is actually it could be expedited by having supply chains, that we discussed in the past 1 and 2 hours through digital supply chain or other form. So that's my general comment. And actually on the other side, which based on my own experience, which I come across, especially when we have anchor finance with regards to supply chains, the other party that we also need to discuss is actually auditors, right? Because in some cases, especially with regards to, for example, when we discounting AR of anchor, right? What they want is actually to be off balance sheet, yeah, because they don't want to see that on the books as especially or at least as a trade payables, because they want to manage the gearing ratio, right? And my experience actually from one accounting firm to another, they have a different standard, So sometimes they recognize that as a bank financing, which is like, which is a turn off for the anchor in some cases, yeah. And actually to highlight the Bu Anna's concerns, all this time, a lot of the supply chain is actually a domestic supply chain, right? We actually, IFC in this case is actually in positions to embark into more of cross-border supply chain financing, because that's the most difficult part. We know the we know the buyer is a big names, it's reputable names, but for us as a local banks or Bank Indonesia to connect to that anchor, unless there is a third party like IFC involved in between, it will be difficult. Yeah, so that's my few comments on this. Thank you.
Thank you. I see one question in Q&A. So has IFC implemented SCF digitization effort partnering with any IFC's debtor clients in Indonesia? If yes, can you share the experience? The short answer is no, we haven't partnered with our debtor or clients in Indonesia for SCF digitization.
Perhaps I can also add to this question. Looking at supply chain finance in Indonesia, it is a little bit behind other regions. And that's also one of the reasons why we have this session today, is actually to kick off to see how supply chain finance can be developed for Indonesian businesses as well. And I think that's also kicked off why we have this opening session together with IFC. So that we can work with different banks and different corporates, understanding as well your market-specific needs. I think by Jeffrey also mentioned earlier that sometimes it's difficult for us to work with the overseas buyers entities, or sometimes counterparty banks as well. So Pa Adria, I guess stay tuned. we'll have more updates in the future, hopefully, to be able to work with you, hopefully. And I've also unmuted your mic if you'd like to also perhaps introduce yourself and what insights you'd be interested for us to work with in the future as well.
Okay, hi everyone.
Hello.
Hi, it's a good discussion, I think. Let me introduce myself. I'm Adria Sudarma. I'm the VP Sales of the Joint Venture Corporation and Supply Chain at Investry. So, I mean, obviously, this is the kind of work that the kind of approach that we are doing to increase our business as well. Because I mean, since the beginning, we have been focusing on this supply chain financing scheme, yeah, and then for the last 5 years. And I think starting from 2-3 years ago, we were focusing on partnering with ecosystems, with e-procurement, with payment gateway, and also with e-commerce as well, in order to to get more access to data, to get more access to customers as well, and then to have a reliable data coming directly from the source of the transaction. So I mean, it is the approach that we are doing. And then very interesting, I mean, looking at the trend in Indonesia, but I think overall, as we see from the government side, has been doing a lot of improvement by having the electronic procurement platform like the LKPP, and then we also see the trend on the state-owned enterprise as well, gearing towards e-procurement and e-tender as well. So that's the kind of effort that that we are doing, a lot of partnership with those ecosystem, with the corporates as well. And I really hope that things are keep progressing towards that direction, because it's very crucial, yeah, for us to be able to provide access to the to the lower tier of the food chain on this supply chain. So so that's my take on it. And I mean, I think we have the same vision with IFC on this case. And I think the way I see it, as fintech lending this is the kind of proposition that we are also offering this structure to the banks who are our bank partners, who became our institution lender for all the loans that are generated in our platform, especially that comes from those partnership and ecosystem. Thank you.
Thank you, Padria.
Thank you. Just to add from my end, so we do talk to SCF platform providers in Indonesia increasingly, and also of course banks is interested, but also e-platform providers is entering Indonesia SCF market and specific product, and discussing with the local banks to set up the business. But we understood that one of the biggest challenges this platform provider has is that the product understanding of the bank. So if you talk about factoring and reverse factoring, it's very different in terms of risk features and issues, etc. So it's also for banks to understand new product from A to Z, so that they can fully leverage the platform providers. Because at the end of the day, technology is just an enabler to scale the business. But what's important is the business model that they need to set up in the beginning, fully on board. So I think this part IFC can come in and review the readiness and sort of identify areas of collaboration in terms of capacity building.
Yeah, also, I think in addition, I just would like to add, I mean, I think trust is also the key issue on changing this mindset, yeah, especially from the anchor side, from the corporate side, because it will also involve the disclosure of data and transaction, right, from the anchor side. And yeah, I think I mean, in a matter of fact, on the ground, we also see that lots of corporates or anchor are still how to say it? Yeah, some corporates are still a little bit left behind in terms of having this mindset of the digital footprint on this, because as I see, I even see a lot of corporation even with ERP, yeah, with enterprise resource system. So a lot of them are even still separating between the procurement process and with the payment process. So it's I mean it's a little bit interesting, yeah, to see how the way that corporation some corporation are still managing the supply chain in the old ways, where the finance department are still having the final say on related to the terms of payment, separate themselves from the from the users or from the procurement team. It's just that unfortunately we condition like that on the ground. Thanks.
Thank you for the comments. Any other questions, comments from the floor? Otherwise, I think we can move on to the closing remarks, which will be me. So thank you very much again for joining this webinar. And I hope all the sessions were relevant and useful. And again, we would like to extend special thanks to APINDO, especially Alicia, for helping us organize the webinar together, and also IFC management and representatives for their support and for sharing their insights with us, all of us today. Today our aim was to discuss key themes on digital supply chain finance, and we learned SCF itself is exceptionally important for banks to support struggling economies, and digital is plays a key role in supporting supply chains and increasing access to finance for MSMEs, particularly for smaller suppliers and retailers. In the ongoing COVID-19 pandemic situations where credit appetite and liquidity tighten, SM becomes not only essential component to fire up countries' MSMEs engine, but also a game changer for those banks who understand how to translate and adapt to this opportunity early on. We discussed two key angles today on digital supply chain finance. One was technology-enabled supply chain finance for small and medium enterprises to measure growth for banks. And second point was supply chain finance digitization in real sector generates increasingly standardized data on transaction flows and participants in the supply chains, and increased transparency and information at every stage are key enablers for the delivery of supply chain finance to SMEs. And IFC do believe development of robust SF market to unlock MSME access to finance a key strategic priority for Indonesia, and is an entire ecosystem effort to create markets and opportunities. And of course, SCF ecosystem consists of a diverse set of players from suppliers, buyers, distributors, banks, but also platform providers and credit insurance for risk mitigation can provide scale, credit enhancement techniques, etc. Indonesia offers a huge opportunity for supply chain financing, considering significant MSME finance gaps, which has prevailed for many decades. And IFC, we as advisory team can support clients in multiple angles as part of our capacity building activities. For banks and non-banks, we can arrange the dedicated 90-minute session to review the readiness of a bank to launch a scalable and profitable SCF program. We have tested and tried competency assessment framework for supply chain finance. And we have used this as a diagnostics tool for the banks, for our client banks globally. Based on this assessment, we can agree on some areas of capacity building where we can collaborate. And also for anchor corporates, we conduct anchor mapping exercise, help corporations gain a clearer picture on how to maximize profits through SF program. And it helps access the financing needs of value chains detailed study, which is carried out to map the linkages between key stakeholders in the value chain. IFC and also APINDO stands ready to assist your institution in gaining better understanding of the complexity of a supply chain finance program in the country. And IFC will bring our global knowledge to create a safe market that would enable you to provide financing for this important segment with better understanding and confidence. Just for your information, we, as IFC, launched a global knowledge guide targeting for banks that are either considering to design or are looking to scale up their supply chain finance propositions. And this publication captures global trends, benchmarks, best practices, lessons learned, and it can really help mobilize the relevant stakeholders in action in creating market agenda and addressing access to finance challenges for MSMEs. So we will share this guide. I mean, if you're interested, we can share with you this guide after this webinar. And please feel free to reach us out if you would like to organize an in-depth SF discussion or any follow-up. We're open to have any kind of dialogue going forward. With that, I would like to thank you again for joining this webinar, and please stay safe. Thank you very much.
Thank you.
Thank you.
Thank you.